Hey, what's up? It's Tim from EminiMind. Wanted to do a quick trade recap here, talk about some bigger picture things. Today's Thursday, the 13th of July. Not a whole lot going on. You can see the 30-minute high and the 30-minute low marked here. We've just been sticking inside of that all day, so not much to do there. But if we do go to the bigger time frame, we can see that we only have one more unfilled gap above us before we reach our all-time highs. So that's 46.59 and a quarter. So that's our last unfilled gap. Still a little ways to go before we would get to that, but if we look at the retracements, that is kind of right up at the negative 23 for, it's the 61.8, negative 61.8 here of this retracement 38.55 that was already in play. We moved above the negative 23.6, came back right to it, and now we're kind of on our way to that negative 61.8. So that would be the kind of the extended target, if you will. Market's pretty much been going straight up all year. If we look at the trend lines, we've got a couple different ways we can draw them. The most recent kind of trend line splitting the middle here, but if we just look at the trend lines from the year so far, going back to like last year's lows and just running through some of these low points, when we start to go steeper, so this cyan line here is kind of at a 45-degree angle. When we start to get steeper, we can then all of a sudden go straight up. And we kind of had that back here where we went steep like this, and then see how we drift down and sideways to the next less steep trend line, and then we hit that one and sort of have been running up along this trend line. So as more time goes on, it could be over the course of a month, if we sort of drift, maybe even if you just move sideways, this trend line down here is rising, and you can work your way back to it without having a big major sell-off. There's been a lot of recent economic news reports and things talking about how inflation's slowing, and this home prices have are rebounding and yada yada yada. So without even getting into the depths of a recession here, there's already this talk of coming out of a recession, and so it doesn't take much future excitement, if you will, to keep the markets just running. And so we don't necessarily need a big sell-off to hit this trend line. You could just move sideways, or even like a bigger bull flag to come down to this trend line. So keep an eye on that. I like to keep those trend lines on my chart, and then with Thinkorswim, I just have these different drawing sets, and so then I can save those drawings and then come back to them without having to delete them and redrawing, especially stuff like the gaps. I mean, I've got these gaps going back years, and so leaving those on there is a lot easier than keeping them written down by hand or on a post-it or something like that. I did want to go back to a couple trades from Monday. It was kind of a quiet week, which is all right when you're kind of off of a holiday week like we had last week. But if we go to the 10th, that was Monday, we had this beautiful, beautiful double top here with an inverted hammer. So the top is here. Had the inverted hammer on the second leg of the top, and then just selling one tick below the candle's low, and then it was just down, 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 all the way to here. So that was about a 10-point move. That was a really nice way to kick off the week. A couple of small retracements on Monday, but they didn't really get a ton of follow through. First target and a break even. Otherwise, I haven't had a whole lot this week. Not much happening with the 15-minute, and we've been in a little bit tighter ranges. If we go back to the daily, yesterday was kind of this dragonfly doji. Today, super tight range. So not a whole lot going on, and that's okay. These gaps, we can sometimes when you get a whole bunch of gaps in a row that end up unfilled. I didn't mark that one. we can start to kind of bounce to the down. So if we're gapping up like this, we can fall down pretty quickly too, as the market kind of moves back to fill some of these gaps because they're so recent, versus like when we have a lot of overlap here, where each day is filling the gap and overlapping into the prior day. Those run-ups can be a little more sustained sometimes. So I'm not, I'm keeping my eye on potential smaller sell-off. You can even come in here and do, when I say small sell-off, I'm just talking a couple days, not a massive deal. But if you come in here and draw kind of the most recent retracement on the daily, you can see we're right at the negative 23. So then drawing the next retracement would give us like a 44.75, and that could come down and knock out a couple of these recent unfilled gaps. So that's the kind of stuff that when we're just kind of chugging along here, um, looking for some swing trades, you can definitely hold in swing trades pretty easily just by drawing or just by using even like hammers on the dailies with a entry above the hammer, just like the 1 minute, and a stop below the hammer. You can stay in these trades, and then once the trade starts going, you can just trail behind each candle's low, just like we would intraday, and catch some decent moves. Whether it's on the ES, you're probably not trading overnight with futures, so like SPY or something like that. Those are all good things to look at when volatility is really low. So that's what I'm looking at right now. Quiet week. Be back next week, and hope you have a great weekend. We'll talk to y'all soon.